Yeah, good morning, my Teaserking family. How is everybody today? You are well. Sorry, I had to go to the bank and teach some economics to these idiots there. And I stopped for some groceries on the way home, but it doesn't matter. We'll still do our two. Gold and silver it's a joke. Um, Gold, look at this ride, 43.50, and the 10 o'clock drop all the way down to 42. It goes down $90. Yeah, that's real. And now it's back to 42.77. Silver 61.20 was 64. So we were sitting 63, 64.30 comfortably till the 10 o'clock drop. All the way down to 61. What the fuck is this? This is a $3 drop. This is the insane Ponzi scheme that we call comex. It's JP Morgan, and the problem is they're lowering it to buy the silver cheaper. Basically, that's what's happening. Let me get my pita. All right, sorry about that, but I haven't had a chance to eat yet. So if you want to buy silver and you're controlling comex, and you can run fake options to lower the price so you can buy it cheaper, you buy it cheaper. That's what JP Morgan's doing right now. They're a bunch of crooks. Should all be in jail. This whole thing should be totally illegal. But we'll burn them on the other side. So 42.79. All right. Well, gold's been around 4,300. Not a problem. Silver, hey, it's over 60. It's run up, but this is not consolidating or profit taking, because that's only idiots do that. This is paper. We know the physical is at least 10 times more, so 700. And 61, I mean, they can do it all they want, but notice they do it when the U.S. is on. The biggest problem with comex, besides being made off, is there's sections, right? The Chinese have it, the Europeans have it, and the U.S. has it. So notice when the U.S. does this, when nobody else is on but them, and then you do this big kill, what are they accomplishing? Only that they can buy it cheap. Not that they can't push the price down. They can't go to $20 an ounce. They want to, but they can't. There's too much in play with the others. Leave their options up, the calls. So what they're really doing is allowing China and Russia to buy silver at $61, and you can't get it anywhere. They're going right to the mines. So wait a minute. If Russia and China and India are going to the mines to get the silver, what the fuck is this? 61.11? Really? So this is just bullshit. I wouldn't worry about it. We know it's $600, $700 an ounce. We're just waiting. We know you can't find it. It's all sold out. So this is just JP Morgan. Obviously, they're broke. Obviously, they've got all these shorts that they have to cover, which they can't. That's all this is. So we're going to dump it. We're going to do more shorting, and people will buy it, which we have to cover, which we don't have the silver or the gold to cover. Shows you how bad a shape they're in, that they have to do this to try to buy it cheaper. Like, oh yeah, 61 is going to be, yeah, no problem. Look at all the money I'm saving from 64. What a joke. All right. So we'll see. It's all bullshit. Let's see who just texted me. All right, quick picture. All right, so let's go to football. 42.73 gold, 61.13 silver. Again, it's not real. It's 10 times higher. I was listening to that one guy who's the Chinese guy, but he talks AI. And so we don't know what he's talking, or he's just some Asian guy talking, but we're not listening. And he was making a comment how JP Morgan was in trouble. They didn't, no, he was making a comment. The point I wanted to make was he thought that the paper and the physical price were the same for all these years, and now it's different. It was never the same. They would have used the paper price for the physical because there was no physical price. No way the paper and the physical price have been the same ever. Never, never, never. It's just people stupid enough to sell the physical paper, but don't ever say that the paper price and the physical price are the same. How could it be? You're doing all these derivatives, shorting the paper price. Why would the physical price be the same? You don't know, because you don't even know what the market was, because there is no physical price of gold. There still isn't really. Although we know that China, Russia, and India are going right to the mines and some of these companies to buy it, and they're paying 100, 100 and a quarter for silver. That's what they're paying the mine to buy it. So probably that's the real price, but again, they're going right to the mine. All right. Football yesterday, I did not touch it. Atlanta 29, Tampa 28. Tampa with a 28-14 lead. What happened to their offense? What happened to their defense? When I analyzed the game, Atlanta had a 28 defense and Tampa a 31. Now, I didn't know it would be high scoring, but I knew both defenses sucked. Now you can understand when I tell you Tampa's got a 31 defense and they give up 29 to Atlanta, their defense sucks. They just got Winfield Jr., and that's it. So what happened in the game? 28, Evans played, so Tampa started scoring again. So again, that's the injury. Atlanta, it was Kyle Pitts, obviously getting better, and Bijan Robinson running through Tampa. Okay, so Tampa is now, are they back to an over team? Well, I think as long as they have Evans, they're an over team. Terrible defense. So you can't bet Tampa because their defense sucks. Now, why does their defense sucks? This I don't know. But Tampa's not very good, which we knew the week before when they lost to New Orleans at home. You know there's a problem. Now, so it's just understand Tampa is an over team. As long as Evans is there and Godwin's there and Baker's there, you're not going to stop them, but they can't stop a high school team, and neither can Atlanta. So 29-28, Cousins against Baker. Cousins looked okay. I still don't understand at the end when it's 28-14 and Atlanta scores, they go for two. Oh, according to Herb Kirkstreet, the third stringer from Ohio State, analytics say to go for two. Why? Well, the odds say you'll make the 2-point conversion. Oh, really? And what if you miss? You're down 8. Now you got to go for two twice. You didn't make the first one. You're not going to make the second one. Now you're down 2. You kick your extra point. You go 28-21. You score at the end. You kick your point. You're now in overtime. Then the field goal is to win the game, 31-28, not Now you need a field goal because you are too stupid to kick your extra points. Again, why being down 14 and scoring says go for two? This is the problem with it's very hard to watch these games. I didn't watch it. I don't have Prime, and I'm not going to waste my money getting Prime to watch Tampa Bay Atlanta. No. I was just listening in the car on the way home. I didn't like I really don't know why I went, because I'm just telling her I'm just in gold and silver. I don't care. I was reluctant to say that. And I don't know if she was a salesman or what, but she asked for my driver's license. I was really reluctant to give it to her. Like, why do you need that? It's just they're checking on you. And you're still working here and you're still doing there. It's none of your business. I didn't like that at all. I won't ever do that again. Don't go in. The bank says, I just want to talk to you. Don't go in. It's none of their business what we do. We have an account there, fine. But you don't need me in showing you my license, proving that I'm me. She said, I'm your personal banker. I don't need a personal. I'm my own personal banker. I'm my own financial planner. I don't need anybody. All right. So don't go into your bank just to chat. There's nothing that they can't do on the phone. Arizona at Houston. Houston, 9.5, 42.5. I have seen some Houston 9s. So just you can get a 9, get it, keep it to 3. 9 and 42.5, 43. Really nothing's changed. Arizona, a Z team giving up 34 a game, and Houston, a B team, giving up 18. Brissett against Stroud. Play against Arizona, 12-1. Take Houston, 29-3 the last 2 years, 13-0 this year in a teaser, 13-2 at home the last 2 years, and 9-1 as a home favorite. So it's pretty obvious Houston is the man. Good morning, Greg and John. And you're betting on the strong defense in Arizona. Now, Arizona gave up 34, but they played the Rams, probably played the Niners or the Seahawks. So against the better teams. Now, Houston really doesn't have that offense, so I don't think Houston's going to put up the 34. But again, who needs the game? Houston needs the game. They're trailing Jacksonville by a game. They're really a couple games out of the wild card between Buffalo and Baltimore. Buffalo and San Diego. So Houston needs the game, and Arizona is a Z team. The Jets in Jacksonville. Jacksonville 13.5, 41.5. The Jets a Z team with a 30 defense. Jacksonville is an A team with an 18 defense. Taylor against Lawrence, and not Lawrence Taylor, but Trevor Lawrence. Oakland at Philly. Philly 11.5, 39. We'll go through the temperatures. I think I got 16 degrees here. We will see. It's cold in Philadelphia, which I'm sure Oakland, a dome team, is going to love anyway. Oakland, a Z team, 25 defense. Philly, an under team. They can't score with an 18. It's going to be Pickett against Hurts. I think because Pickett played for Philadelphia last year, they think, well, he knows their defense or whatever. But the fact is he still stinks. DK, you doing the Army-Navy game? Yeah, I mean, I did it yesterday. But yeah, I'll do it. There's also a Boise-Washington game tomorrow. Washington goes to the Giants. The Giants 2.5, 46.5. Washington, a Z team, 32 defense. The Giants, a W, 31. It's going to be Mariota against Dart. Why is Dart playing? I don't talk about a guy who's not ready. Not only that, but he's He's already got, what, 2 concussions? These running quarterbacks are a joke. Buffalo, New England. Buffalo is still a 1-point favorite, 49.5. I've not seen New England be favored. I don't know why. Buffalo, an over team with the 24 defense, and New England, an A team with the 19 defense. Again, very weak schedule. They did beat Buffalo the first time, so their only win. Allen against May. New England is 12-1 in the teaser this year. Again, a weak schedule, a pretty good defense. And we're not sure how good Drake May is. We'll see. We know Allen, who chokes, should be okay here. But this is Buffalo and a must-win game here. San Diego at KC. Talk about a must-win. KC, do or die. 5.5, 41.5. I love this 5.5 line. What is that? Well, they go for 2 and miss a lot. So the numbers fall on 5. What a bunch of bullshit. All it is instead of laying 1 in the teaser at 7, I get a point now. I get a half a point. So that's the only difference. Both teams are under teams. 20 defense for San Diego, 24. Again, San Diego with their tackles are out. KC's missing a tackle, which is really hurting them. Herbert against Mahomes. KC 13-2 is a home favorite. So I got 5.5, 41.5. Baltimore, Cincinnati. This is very cold here, 12 degrees. I think, yeah. Baltimore is 351.5. Baltimore is an under team. They can't score. Lamar will have trouble here. 21 defense. Burrow over team, 33 defense, and Burrow. I was going to play this game over, and I'm shocked it's still sitting at 51.5. I'd have thought this over would have went down to like 47, 48 by now. So I don't know why it's not. This is not the same as a 40-degree day in Cincy. This is 12 degrees and cold. No wind or anything, but 12 degrees. So, again, Burrow is a home dog. Really, this is a fight to win the division because Cincinnati still can go 8-9. Pittsburgh's got 7 wins. So who knows if they'll get to 9 or 8. So Cincy, they'll play. Chicago, Cleveland. Chicago 7.5, 39. This is 15 degrees with wind chill. It's like 5, so this is a very cold day. Cleveland, an under team with a 24, and Chicago, an E team with a 21. Prime Jr. against Caleb. I can't see Prime Jr. doing anything here, nor Caleb. It's going to be there running by the Bears, which turns it into an Army-Navy game. And let's see. We got Indy, Seattle. Seattle 13.5, 43, actually up from 42, surprising. Indy, a W team with a 26 defense, and it'll be, I don't know if it's Leonard or Rivers. Might be Rivers if the total went from 42 to 43. Like he's going to come in and do anything. Leonard stinks. Forget about him. He'll probably run a lot. Seattle, an A team with a 15 defense, and Darnell. They're 11-2 in a teaser this year. Let's see if we can get the starter. So if I go into the game, they should tell me. Colts seem to be preparing a certain. So we still don't know. It doesn't say, but my guess is that if he's there, he's certainly not ready to play Phillip Rivers. You don't sit on your couch for 5 years and just, oh, yeah, I can play professional football against Seattle. That'll be a huge mistake. The timing certainly won't be there. If it's Riley Leonard, there's no timing either. So I don't know. Leonard, we know, is not good. Interesting. Tennessee and the Niners. The Niners, 12.5, 44.5. Tennessee's a Z team, 26. Cam Ward, and Frisco's an A team with a 21 defense and Purdy back. So they're playing much better. They need the game. I'll go through all that when I'm done with the line. Carolina 2.5, 40.5 to New Orleans. Carolina an under team, 24 defense. New Orleans an under team with a 21 defense. Young against Shaw. Play against New Orleans this year is now 10-2 after their win there. I can't imagine Carolina going on the road and beating anybody. I don't think they could win in the Big Ten. Detroit goes to the Rams. The Rams 655. This is do or die for the Lions. They lose, they're out. Detroit's an over team with the 26 defense. LA's an A team with the 20 defense. Golf against Stafford. Play against Detroit is 8-1. No, I can't read my writing. LA is 11-2 in a teaser, 27-5, 15-3 at home, 42-8 overall, 3 years. Play against Detroit as a road dog is 8-1. That's what it is. Sometimes I can't read my scribble. So Detroit's a bad road dog. The Rams, and this is in a teaser again, of course, and the Rams are smoking. Now you're a little skewed by them beating Arizona. They're not going to do that to the Lions. The Lions have to win. So, but they got problems. They got secondary problems. Their whole secondary's out. Vance, Joseph, Arnold, who sucks anyway, and whoever their other cornerback is. Hutchinson is never recovered from his broken leg. He probably never will. And Rams, solid offense, good running back. Stafford playing great ball. Puka will catch anything. And Devontae Adams. And a strong defense. So the Rams should win this game. I heard somebody say, well, they got Seattle next week or something. They're not looking ahead of Detroit. So that's just stupid. I tell you, these guys on BetGM on the radio just shows trying to get you to bet. Oh, I'm taking New Orleans in the money line. Oh, okay. Just a bunch of idiots. So I got here LA 40, Detroit 32. I think Detroit scores. I just think their offense is good enough to score on the Rams based on Arizona getting 20, based on Carolina putting up 28. They're not the steel curtain, right? That you can score on them, and I think Detroit can, and I think Detroit knows they need to, but Detroit's so banged up. So this is a perfect over spot with the over. So 40-32. Green Bay, Denver, your free play. We got Green Bay 2.5, 42.5. Love against Knicks. We got Green Bay an under team with a 16 defense, and Denver an under team with a 17 defense. Denver's 13-0 this year in a teaser, 29-2 the last 2 years, 14-0 at home. Green Bay's not a strong road favorite. Plus, you've got Denver playing San Diego, playing Kansas City, playing Philadelphia. They're not a stranger to it, right? They played very good defenses. They won at Philly. They beat Kansas City. So Green Bay does not have a Mahomes and does not have a Philadelphia type of offense. Love's very chokeable. They barely beat the Bears last week. So, who needs it? They both kind of need it. Denver's trying to catch New England, and Green Bay is, I think they're the 1 seed. Oh, no, they're not. They lost to Philly, I think. Yeah, Green Bay lost to Philly. Yeah, they lost to Carolina and Philly. The key is Carolina. How good are they? They did beat the Rams. They did beat Green Bay. And I think they beat Tampa. So you don't think they're any good because Steve Young, but I think they're just running and defense. But anyway, free play, take Denver plus the 9. They're a very strong home dog, a very strong team. Sean Payton, Bo Nix, everybody thinks he sucks. I don't know. He looks pretty fucking good to me. He looks a lot better than Prime Jr. or Lamar or Hurts. and Love comes and goes. Minnesota, Dallas 648 hasn't moved. Minnesota's an under team with no quarterbacks. JJ McCarthy, 19 defense. They have a good defense, we know. Dallas an over team, 27 defense. So it's very good defense against very good offense, which kind of screws the game because I can't really go defense and I can't really go offense. Dak, he'll throw his 2 interceptions there. And Miami, Pitt 3 and 41.5. This will be cold also. Miami an under team with a 16 defense, but Acme, the running backs out. So look for their defense to get worse because they're killing the clock running, which they won't be able to do. They'll have to go back to Tagovailoa throwing, and they're in trouble. Pitt, I don't know. They're good enough to beat a bad Baltimore team. I don't know. An under team with a 22 defense and Aaron Rodgers. This is 342. I really don't know. I kind of lean towards Pitt, but I don't know what Miami's 6 and 7, and I don't know which Pitt team shows up. All right, let's go to the weather, and then we'll break the games down a little bit more. NFL weather. Cleveland at the Bears. I heard it's supposed to be like 5 degrees there. Here we got 11 and clear. When I read more, sunny with the high near 14. West-northwest winds 10 to 15 with gusts of 25. It's got here 11 degrees. So the high near 14 is not necessarily during the game. It's the high for the day. So you're looking at 11 degrees, probably more like you got wind. So it's probably 0 in Chicago. So make this 11. Baltimore, Cincy, we've got 15 degrees. But when we get into it, 7 mile an hour, mostly cloudy with a low around 2. Again, that's for the day. So we'll stick with, we'll call it 15 degrees. We'll call it 12. So it's very cold there. I wanted to play the game over. Joe Burrow, I think you still can. I don't know. I'm not seeing it drop. This line's 51, 52. It's fucking 10 degrees out with Lamar. I'm sorry. I don't see how this game goes over. But, that's different. In Buffalo, it was snow. It was 25. But when you hit 12, it's really hard to catch. I don't know. I backed off of the over for now. I just don't see 10 degrees. You're going to put up 55 points. I don't know. We'll see. Because I think Lamar is the problem. So I think Burrow will have no problem, especially at home. San Diego goes to KC. We got 17 degrees, 5 mile an hour winds. Sunny with a high near 22, 6 mile an hour winds. So we're looking at 17 in this game. Still a cold day, especially cold for San Diego. And Herbert's broken hand. KC, just look for a lot of running here. I think what you'll see in these cold games is more running. It's easier to hand the ball off and run than it is to go back to pass and get the timing and the receivers to catch the ball in the cold and the quarterback to throw the ball in the quarter. San Diego's used to the dome, so they're going to really freak out. I think KC wins this game the more I talk about it, just because they're home. And it's do or die for them. They have to win, which we'll get into. Buffalo, New England. Now here it's 29 degrees. Chance of snow, slight chance of light snow. Who cares? Let's see. Partly cloudy with a low around 14 and 12 mile an hour winds. Again, at 1 o'clock, it'd probably be in the 20s here. is a lot of outdoor games. Like a couple of weeks ago, it was like all these indoor games. It didn't matter. I mean, here it's like almost every game is a outdoor game. Washington at the Giants, 29 degrees, 11-mile-an-hour winds. I'm not going to get into this one too much. Let's just for shits and giggle. Mostly clear, low around 18. So I'll call it like 22 degrees. And again, I don't know what 18 means. They're giving me the report for the day, not for the game. Oakland goes to Philly. And again, here's a West Coast team in a dome going to Philly. Here I got 30 degrees, 14-mile-an-hour winds, and with a low around 18. So I'll call this 25 also. I don't think it'll be 18 at 1 o'clock. Again, though, you have a dome team from the West coming here and freezing their ass off. Now, Kenny Pickett playing with Philly is the reason he's starting, but he's still not good. I don't think that's the big difference. The JETSs go to Jacksonville, and it's 71 there, so I'm not even going to look. 71, a little bit of wind, sunny day, no rain. We've got Arizona at Houston. Now there we have a dome, so we don't care. Green Bay goes to Denver. I got 56 in Denver. I think that's a huge advantage to Denver because Green Bay is used to 10 degrees like last week against the Bears. And Denver is going to love the 60-degree at home. No weather there. Detroit goes to the Rams. We're in a dome. Carolina goes to New Orleans. We're in a dome. Tennessee goes to the Niners, 60 degrees. So no problems and sunny. A little fog, it says. Indy goes to Seattle. We got 54 with some rain there. Again, nothing to really worry about. Chance of rain. Minnie goes to Dallas. You're in the dome. And Miami goes to Pitt Monday night. 20 degrees. 8-mile-an-hour winds. Partly cloudy with a low around 13. Now, here it might come in because it is Monday night. Now, that'll affect Miami, who's obviously not used to the cold weather, sort of like San Diego. Now, we had a 74 playoff game. No, 73. It was 73. And it was Oakland went to Pittsburgh. And the field was ice. And it was cold. And Swan got a concussion in the game. When Jack Tatum welcomed him. At the end of the game, Stallworth caught a touchdown pass, and I think they won 20-13. And it had to be 10 degrees out. Ice, the field was totally ice. Players slipping all over. So that's your sunny Oakland team going to cold Pittsburgh. And that's what happened. So now we have the weather. We see the impact. Now let's go back to who needs the games as we've done before. Now, the loss by Tampa now makes Carolina have to win. So let's go through it. Arizona, Houston. Houston is a game back of winning their division. It's a must win for them. The Jets and Jacksonville. Jacksonville with the game lead, must win. Again, they're trying to win the division. Oakland goes to Philly. Philly's lost 3 games in a row. Gets Oakland. They are not losing this game. It's at home. It's cold. It'll be a defensive game. Kenny Pickett is not doing anything to this team. And the question is, Hurts is so bad. I guess they'll run Barkley like 50 times. Philly needs it, but doesn't need it. I mean, they'll probably win their division. They got a 2-game lead, but they're fighting for the 1 seed. Washington, the Giants, nobody cares. They both suck. Buffalo, New England. Now Buffalo has to win if they want to win the division. New England's playing for the 1 seed, but Buffalo's more important, playing for the wild card and to win their division. They must win this game. San Diego, KC. San Diego needs it for the wild card. I don't think they can catch Denver. Well, they could mathematically. KC, though, needs it for survival. And when your back's against the wall for survival, you have the advantage. KC will win this game. KC has to win this game. Now it's going to be 17 degrees, so it's going to be a defensive cold game. Baltimore goes to Cincy. Both teams really need it. Cincy's still mathematically involved. Joe Burrow's out there. Baltimore, yeah, they're terrible, but now they're a game behind Pitt, so they really need the game to win their division. Probably unlikely they'll be the wild card. Cleveland, Chicago. Chicago needs it. A, to win the division because they got Green Bay next week. B, to get the wild card, stay ahead of the Lions, who they played the last week. So a very important game for Chicago. Cleveland's out of it. So even though you think, well, they got Green Bay and they're going to be flat, they're not going to be flat. They're going to run it down their throats. It's going to be cold, though. Indy, Seattle. Indy needs the game, but they don't have a quarterback anymore. And Seattle needs it to stay with the Rams. So it's a big game for both. Tennessee goes to Frisco. Frisco needs it to catch the Rams in Seattle and to clinch the wild card. So look for the Niners to crush Tennessee. Carolina, New Orleans. Carolina needs it to try to win the South. I don't think they have a wild card chance. I think they're just looking to win the South, thanks to Tampa Bay faltering. You got to get off of teams. You like Tampa, boom, 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 and then all of a sudden they start losing. Like Indy, you get off. You just, I didn't play Tampa. I played them the week before, one of my only losers, and then I didn't touch them last night. Actually, I think you won. They were 4.5, so you would have won with Tampa last night, plus 1.5. They lost by 1, so you would have won with them, but them to lose to New Orleans and Atlanta at home is a problem. Detroit goes to LA. Detroit, when they have a chance, not that they're in, they lose, they're done because they'll have like 6 losses, and you got too many teams between the LA, Seattle, and San Francisco, and Chicago and Green Bay. Yeah, I mean Tampa will win their division, Philadelphia wins their division. But you don't really have a lot of hope. So you go to 6 losses, you're pretty much done. So it's do or die for Detroit. The Rams, not do or die. They need the game for to win their division, be the number 1 seed. They're not going to lay down just because Detroit needs it. But look for Detroit to play well, or golf for choke, whatever. Green Bay, Denver. Green Bay needs the game. Well, they're a game up on the Bears, and they play them next week. Denver is playing for the 1 seed with New England. So Green Bay is kind of playing for the 1 seed with the Rams in Arizona and Seattle. But they don't really need it. Denver really doesn't need it either. It's not backs against the wall. They're playing for the 1 seed. That's different than survival. Kansas City and Detroit are playing for survival. Denver, Green Bay are not. They're pretty much okay for now. Minnesota, Dallas. Dallas is do or die. They got to win out. Hope Philly loses out, or hope. I don't know what else they can hope for. They've lost to the Bears, and they lost to Detroit, and they tied Green Bay, and they don't have a chance to catch the West Coast, the West Division. So there's only one wild card. It's going to be between Dallas, Detroit, and the Bears and or Green Bay, whoever doesn't win the division. And then Miami, Pitt's in a must-win. They're trying to win their division. They got a game lead. They got to play, I believe, Baltimore again or Cincinnati. They're going to play one of those in the next couple of weeks. So it's do or die. Miami, pretty much out of it. I think mathematically they can win, but now Acne's gone. Their running back, who they've been running the ball with. Teaser trends. Play against Arizona, 12-1. Take Houston, 13-0 this year, 29-3 the last 2 years in a teaser. Play against the Jets 11-2 this year, 26-4. Take Jacksonville 11-1 this year. So this is Jacksonville. Oakland, Philly. Play against Phillies 11-2, and then play against them as a home. I'm not sure what this other one. I got 12-1, but I don't know what that is. All right, sorry about that. So I have a 12-1 here. Oakland cannot be 12-1 in a teaser, so I don't know what this is. Play against, maybe, I don't know. But I got Philly play against is 11-2. Philly on a 3-game losing streak. So look for Philly to play strong. I don't know what that means with them. Hurts just terrible. I think there's a problem between Hurts and A.J. Brown. Barkley's not getting the ball. I don't. The coach has lost it again. Washington and the Giants play against the Giants 11-2 this year. Buffalo, New England. New England is 12-1 in the teaser this year. San Diego, KC. KC 13-2 is a home favorite. Baltimore, Cincinnati. Play against Cincinnati is 11-2. Baltimore 12-2 is a road favorite. Cleveland, Chicago. The Bears 11-2, 5-0 at home. Play against Cleveland as a road dog 11-2. Again, these are 6-point teaser trends. Indy, Seattle. Seattle is 11-2 in a teaser. Tennessee, the Niners. Play against Tennessee 11-2. That's it. The Niners with the injuries, they don't really have a good teaser trend to look at. Carolina, New Orleans. Play against New Orleans 10-2. Nothing on Carolina. Detroit and the Rams. Play against Detroit as a road dog 8-1. The Rams 11-2 in a teaser, 27-5 2 years, 13-3 at home are the Rams. Green Bay and Denver. Denver 13-0 in a teaser this year, 29-2 the last two. So with Bo Nix, they're 29-2 in a teaser, 14-0 at home. This is Sean Payton. Don't fuck with Sean Payton is all I can say. Minnesota, Dallas. I have nothing. Miami and Pitt. Pitt 6-1 is a home favorite. And the reason you don't have it is these teams are inconsistent, and I'm only looking at over 85%. So they might be, 11-3, but it doesn't register as a big trend. And teams with the injuries, you got to be careful. So you almost got to look at it. Well, let me get, with Jalen Daniels, without Jalen Daniels. I mean, it's a little bit tricky to do that. So there you have it. There you have who needs it. You have the weather. You have the teaser trends. Starting quarterbacks. We went through, we'll do it again. Arizona, Houston, Brissett against Stroud. The Jets and Jacksonville, Taylor against Lawrence. Oakland, Philly, Pickett against Hurts. Washington, the Giants, Mariota against Dart. Buffalo, New England, Allen against May. San Diego, KC, Herbert against Mahomes. Baltimore, Cincy, Lamar against Joe Burrow. Cleveland, Chicago, Prime Jr. against Caleb. What a quarterback matchup that is. Indy, Seattle, I don't know. It's either Leonard or Rivers against Darnell. Tennessee, Frisco, Ward against Purdy. Carolina, New Orleans, Young versus Shaw. Detroit, LA, Golf versus Stafford. Green Bay, Denver, Love against Knicks. Minnesota, Dallas, JJ against Dak. And Miami against Pitt, Tug against Rodgers. So you got Rodgers playing with a broken left hand. You've got Herbert playing with a broken left hand. What's going on? So again, probably the biggest team that needs the game. Definitely teams that need the game, have to win. Houston, Buffalo, Kansas City, I guess throw Cincinnati in there. I guess you throw the Bears in there. Seattle, yeah, they do, but a little differently than those others. San Francisco and LA will fall into that category. Detroit must win. Green Bay and Denver, they kind of have to win and they kind of don't. And then Dallas is a must win and Pitt is a must win. So there's a lot of teams. Now, that doesn't mean anything. I always laugh at that. These teams need to win, but they don't win. So it's funny sometimes. You'll see it normally the last week of the year. The average teams, the Atlantas, the New Orleans, when they're like 9-6 and they need to win, and they wouldn't win. You got to really play the A teams when they have to win to get the win. But some of these bad teams, even though they have to win, they're bad teams. You can't bet on them to win. So keep that in mind. Prophet, Greg and John looking at the Army-Navy game. So we've got the Navy 6.5, 38.5 here. I imagine this is in Philadelphia. It's going to be cold. Navy's got the better team, the better quarter. They're 9-2. Army's 6-5. One rule: we always bet this game under because they know each other's offense. And they both, they tried throwing the ball a little bit, but they're both pretty much at the end of the day running teams, and they know how to stop each other's runs. So keep in mind here. But again, Navy with the better quarterback. So go Navy, beat Army. The other game is Washington and Boise. Washington is up to 10 and 52.5. Started at 8.5. Boise a B team, 23. Washington an A, 19. Now, I don't know. Let's take a quick look and see if, is the Boise quarterback getting ready for the NFL draft? I don't think so. This is at 8 o'clock tomorrow. Bet on Madsen to have a big LA ball, so apparently he's not. So it's not like the money's going on Boise, and yet the quarterback's apparently playing. I doubt the Washington quarterback is not playing. He's just a sophomore. He needs to play. So that's what we got tomorrow: Army and Navy, Boise, and Washington. And then we'll get into the rest of the mess. On the 16th, which is Tuesday, then we get the wonderful Troy, Jacksonville State. So we'll go through that Monday. We'll go through this week and the playoff games. Again, from yesterday, Oregon 21, 50.5 over James Madison. We got Ole Miss 17.5, 56.5 to Tulane. Texas A&M 3.5, 51.5 over Miami. And Alabama 1.5, 40.5 over Oklahoma at Oklahoma. Then after you're going at Ohio State, at Texas Tech, at Indy, and at Georgia, and none of them will lose. But they're in bowl games where this isn't. So what I don't get, yesterday there was a touchdown by Atlanta, and the guy did his tush hit the ground first, or his left foot, or his right foot, or his elbow. And it's taking 5 minutes to come up with that. Well, if it takes that long, what did the ref call it? He called it a touchdown. Just I don't even know why you're reviewing it. Well, the ump called it a touchdown. Maybe he's wrong. Well, so what? We don't care if he's wrong. If you'd quit doing that, they'd be right a lot more than they'd be wrong. And this is what hurts football. This is what hurts the TV. So you're sitting there watching something for 5 minutes. It's like, what's going on here? Why are we watching this? Just move on. Call it a touchdown. Call it an incompletion. You've looked at it for 5 minutes. You can't come up with a conclusion. What do you want? What are we going to do? Just sit here the rest of the night? I mean, it's so stupid. And I don't know who's buying Amazon to watch that game. I would never buy Amazon to watch that game. Notice the big games are on regular TV. The Thursday night crap games, the London crap games, the Germany crap games are on Prime or they're on the NFL Network, and nobody cares. Nobody's buying it for that. So I just think that whole process is stupid. I think this whole instant replay is stupid. Let's get it right. You can't get it right. Even when you get it right, you get it wrong half the time, even when we slow it down. But the ref, if you're going to have refs, let them call the game. If you're going to have this instant replay, then get rid of the refs. Way too many penalties. Yeah, and I love how the announcers, it was. Look, he did. It is holding. Give me a break. That's not holding. That shouldn't be called. It should be if it affects the receiver and he can't keep going, or when they grab his arm and he can't raise his arm to catch the ball. How many times do you see that and they don't call interference? So it's bad. It's pretty bad football. And the ratings got to be tanking. I mean, I don't know I was watching a movie or whatever. I don't care. I mean, I didn't even have the game, so I didn't really care. Didn't matter. Greg and John, what happened to the Bucks? Well, their defense, basically. They're giving up 31 a game. That's any team with the weak. That's why I shout out the defense. We don't bet 31 defense. We bet them over. We don't bet on them. Look at the LA and the Lions. A good example. The Lions have a 26 defense. LA will probably win the game, and you can say, what happened to the Lions? They got a 26 defense. Their whole secondary is injured. Both safeties and a corner, and probably the other corner, are hurt. Hutchinson has not recovered from his broken leg. No pressure on the quarterback. Goff's going to he'll have a field day. You can say, what happened to the Lions? The injuries. Same thing that happened to Tampa. I'm sure the injuries. The defensive coordinators are idiots. And, you're not sacking Kirk Cousins, which all you have to do is apply pressure, and he folds up. So a lot of it's the defensive coordinator and bad coaching. They scored 28 points. Atlanta, I don't know how they got – Atlanta got shut out by Carolina and goes to Tampa and wins 29-28. Unbelievable. But that's the problem when you don't put pressure on. Now, is there injuries? Probably. But that's bad GM not having – the Lions are going through the same thing. They have no pressure, and everybody's injured. Oh, wait, but we paid $30 million for the right tackle, and the backup receiver, the second-string receiver, we paid $30 million to. So we don't have any money for anybody in the secondary or defensive line. They're all injured. So we don't have any money for them. So we got guys from Farmer Jack's that are playing and Kroger's. And then that's what happens, right? These GMs are so stupid. You're going to have the whole team injured. So you got to save money for the backups to come in and play. You cannot just pay the starters. This is football. You can't just pay the starters when they get hurt. Then what do you do? So that's what happens to them. That's what happens to all teams. They get the injuries. What's going on with Philly? Well, they're realizing Jalen Hurts can't throw the ball 5 yards accurately. We've been saying that for 5 years now. He stinks. The defense, you let a lot of them go free agent from the Super Bowl. You had the killer defense, and then 3 or 4 of them sign with other teams. That's what happens. You lose talent, and you don't have backups, and you're going to get injuries. This is the NFL. So It's the smart team that can, instead of getting $30 million right tackles, you sign a guy for $5 million, and then the other 25 goes for extra secondary defensive linemen, backup receivers. That's basically what you need. And paying Jared Goff $50 million, what a mistake that was. You're not winning with that guy. So anyway, we tend to team. So if I go through this, Houston 18 defense. This is last five. Jacksonville 18 defense. Philadelphia 18 defense. New England 19 defense. San Diego 20 defense. Chicago 21 defense. Seattle 15 defense. The Niners 21 defense. The Rams a 20 defense. Green Bay and Denver 16 defenses. Minnesota 19 defense, and Miami is 16. Are you following? Are you catching on? That's who we want to bet on. We don't want to bet on Arizona 34 defense. The Jets is a 30. Washington and the Giants 32s. Cincinnati at 33. Indy at 26. Tennessee at 26. Detroit at 26. Dallas at 27. So now we hey, we don't want to bet on bad defenses. It's either the team or the coordinator. Somebody sucks, and we don't want to bet on it. If we want to win, we got to go to the defense first. And then we either go under or we take the team. So in the one game, Green Bay, Denver, 16 defenses, you can go under or you could tease the dog. Right? But more apt, it's probably a good under bet with these strong defenses. And that's really the only game like that. Everything else is like LA 20, Detroit 26, San Francisco 21, Tennessee 26, Houston 18, Arizona 34. So it's pretty cut and dry. I'm taking this team, and when I get the Denver Green Bay game, I can play it under. I have given you the free play of taking Denver as a home dog, getting 9, because they are, 13-0 in a teaser, and they just win. They just win. It's Sean Payton. It's Bo Nix. They win. You're getting 9. You're at home. Green Bay, not a good road favorite. So that's how I arrived at it. Denver 20, Green Bay 17. All right, let's take a look at our gold and silver and see action there. Silver 61.21, and gold back to 42.94. It'll be 43 again. So silver's taking a hit. It ran from 60 to 61 to 62 to 63. I think we got a little 64, and now it's okay. You did your derivative, real free market, and pushed it down. So I got 61.75. What was silver? That was lower. Yeah, it went all the way down to 61. So it hit 61, and then and now here comes the buying, 61.75 on its way back to 60. Well, it was 64.33 this morning. So let's take a look at some economics. All right. So I don't know. This one is talking about silver 64, and then they tried it, didn't work. So we can play a little with this. There's one I want to show you.
This is a newly developed bone conduction
From the other day. I got to find that one.
Specifically designed.
The price, they waited until you were asleep. It is an old tactic, a cowardly tactic.
No, they didn't. They did it at 10 in the morning.
Last night, while New York was dark and London was just pouring its coffee, the powers that be fired their most dangerous weapon. They didn't sell metal. They didn't announce a new mine. They didn't fix the supply chain. They changed the rules of the game. If you woke up this morning, checked your phone, and saw red candles, if you saw the price of silver smash down from its highs and you felt that pit in your stomach and that fear that here we go again, stop, breathe, because what you're looking at is not a market crash. It is an act of desperation. The exchange, the entity that is supposed to be a neutral arbiter of price, stepped in overnight and raised the margin requirements for silver futures. And they made it 50% more expensive to hold a position than it was yesterday. They tried to force liquidation. They tried to trigger a long squeeze. They tried to break your spirit before the weekend. But here's the news they didn't expect. Here's the data point that should terrify JP Morgan and delight every single person holding physical metal. It didn't work. In 2011, when they did this, the price collapsed 30% in a week. In 1980, when they did this, the price collapsed 50%. Today, the price flinched, it dipped, and then it stood its ground. In this comprehensive investigation, I'm going to expose exactly what a margin nuke is. I am going to show you the historical playbook they are using word for word from the 2011 crash. And I'm going to prove to you, using the volume data from this morning, that the smart money didn't sell the dip. They swallowed it whole. The banks fired their silver bullet. And the werewolf is still standing. This is the story of the Friday Showdown. To understand why the market is red today, you have to understand the casino that is the comex. Most people think the price of silver is determined by two people swapping a coin. It isn't. It is determined by speculators trading futures contracts. These contracts are highly leveraged. Until yesterday, if you wanted to control 5,000 ounces of silver, you didn't need $300,000. You only needed a performance bond or margin of about $12,000. That is roughly 25.1 leverage. It allows hedge funds, day traders, and algorithms to bet massive amounts of money with very little cash down. This leverage is what allows the price to fly up. But it is also the kill switch that the exchange controls. Here's what happened last night. The CME Group issued a notice increasing that margin requirement. Let's say they raised it from $12,000 to $18,000 per contract. That doesn't sound like much, right? But imagine you are a hedge fund holding 1,000 contracts. Yesterday, you needed $12 million in cash on deposit. Today, at 2 a.m., the exchange says, you now need $18 million. You have 1 hour to wire us $6 million or we sell your position. Where do you get $6 million at 2 a.m.? You don't. So the exchange's computer automatically sells your silver contracts at market price to cover the difference. This creates a wave of artificial selling. It's not because the fund wanted to sell.
Okay, so that's what's happening. They're automatically raised it, and they're doing all this selling, and that's what you're seeing. You're seeing the selling forcing the price down because they're shorting, right? So they're all selling. That's why it's gone down. It's artificial. It's not anything else. And it'll be bought back up. And then once this happens, you won't see it again. So we should be looking at 75 by next week.
Not because the fundamentals changed. It's because the house changed the buy-in. This is the margin nuke. It is designed to flush out the weak hands, the speculators who are over-leveraged. When they sell, the price drops. When the price drops, other people panic and sell. It triggers a cascade. That was the plan. That is what they did in May 2011. They raised margins 5 times in 9 days. They hiked the cost of betting on silver by 84%. It destroyed the demand, and silver fell from $49 to $33. They are running the exact same play today. They looked at the 60 pluses breakout. They looked at the empty vaults. They looked at Bank of America's losses, and they pulled the lever. Raise margins. But this time, the result was different. Why? Because the people buying silver in 2025 aren't speculators using 25.1 leverage. They are industrial users and sovereign nations paying cash. Tesla doesn't buy silver on margin. The Indian government doesn't buy silver on margin. They buy with full payment. So when the exchange raises margins, the strong hands don't care. They don't get liquidated. This is why the price only dropped a few cents instead of a few dollars. The margin nuke only kills the paper speculators. It does nothing to the physical buyers. And today, the market proved that the physical buyers are now in control. I want to take you back in time. Because if you don't know history, this red candle today will scare you out of your position. The date was Sunday, May 1st, 2011. Osama bin Laden had just been killed. The news cycle was chaotic. Silver had just touched $49.50. It was a parabolic run. Everyone was euphoric. Then, under the cover of darkness, the CME Group announced a margin hike. They raised the maintenance margin by 13%. On Monday, silver dropped $5. The next day, they raised it again. On Wednesday, they raised it again. By Friday, they had raised margins 5 separate times. They beat the market into submission. They forced the liquidation of billions of dollars of long positions. It worked. The price crashed and it entered a bear market that lasted for years. The banks are relying on your muscle memory of that event. They want you to look at today's chart, remember 2011, and think, the party is over, I need to sell before it crashes. They are weaponizing your trauma. But look closer at the chart today. In 2011, the drop was violent. It was 10% in a single day. Today, we are down less than 1%. We are consolidating. Why the difference? In 2011, the rally was driven by paper demand. It was driven by hedge funds buying futures contracts and SLV options. There was no shortage of physical metal in 2011. The vaults were full. So when they killed the paper demand, the price collapsed. In 2025, the rally is driven by physical depletion. We have a 1.1 billion ounce deficit. The vaults are empty. Refineries are halted. You can raise margins on paper contracts all you want. It doesn't create physical metal. It doesn't help Samsung build solar panels. It doesn't put silver back into the LBMA vault. The margin nuke is a paper weapon used to fight a paper war. But we are in a physical war, and you cannot bomb a physical shortage with paper regulations. The fact that the market absorbed this blow today is the most bullish signal I have ever seen.
See, I don't get this. This is this morning. At the time, the silver was still 64, but now it dropped because this happened at 10 a.m. in the U.S. when the U.S. had it. So it's the paper drop that's happening here in the U.S. That's why it didn't start until 10 o'clock. And as we see, it's starting to work its way back. So it did, but they're banking on people that are stupid, that are in paper, to sell it. But again, this has nothing to do with physical. This is a paper game. This is a Bernie Madoff special. So this is not gold, silver going down because people are selling it. This is that restrict the requirements, and that's why we're going down. A little bit more of this.
It tells me that the paper market has become irrelevant. The physical market looked at the margin hike, shrugged, and kept buying. So if the margin nuke failed to crash the market, what did it actually achieve? It created a bear trap. A bear trap is a technical pattern where the price is manipulated lower to trick traders into selling, only to aggressively reverse and trap them. Think about the psychology of the average Joe trader today. He sees the news, exchange raises margins. He sees the price dip below $64. He thinks the top is in, the government is stepping in. But I better sell now and maybe short the market to make money on the way down. So Joe sells his silver. Maybe he even places a short bet, betting it will go to $50. But who's on the other side of that trade? Who bought Joe's silver at $63.80? Was it another retail trader? No. Retail traders panic on red days. It was an algorithm. It was an industrial buyer. It was a sovereign wealth fund. They sat there with their limit buy orders, waiting for margin nuke to shake the tree. They knew the weak hands would fall out, and they stood underneath with a bucket to catch the cheap shares. This creates a springboard effect. Now, the market has cleared out the weak, leveraged speculators. The ownership has transferred from paper hands to diamond hands. The people holding silver tonight are not the people who panic over a margin hike. They are the people who hold for the long term. This makes the price floor rock solid. And what happens to Joe, who went short? When the price turns around on Monday, when it gaps up to $65, Joe is trapped. He has to buy back his short position at a loss. His buying adds fuel to the fire. The margin nuke didn't kill the rally. It reloaded the cannon. It cleared out the leverage so the next leg up can be sustainable. We are building a base at these levels, and a base built on physical demand is infinitely stronger than a spike built on paper speculation.
Sounds like the Romans. When I show you how they build the aqueducts and everything. All right, so that helps us understand it was a margin requirement of a lot higher. You need it. So in other words, when you do the derivative, there's the margin call, which we all know what that is, right? Usually you buy stocks on leverage. You buy you buy 10 shares, but then you leverage the other 100 shares. But if the price drops, then they want you to pay on that 100 shares that you didn't buy. And that's where everybody gets in trouble. And that's what they're doing here is they've raised the margin requirements for the people who are playing options, buying 10 and really getting 100 shares. That doesn't affect us. We're physical. That's why we're physical. We bought it. That's it. So keep that in mind. So we're fine. This thing will shoot back up because of demand, because the supply is gone. And that's all we care about. So in Austrian economic land, high demand, low supply means low price, high price. And that's all we need to understand. All right, let's see some other ones. So there's JP Morgan.
Unallocated precious metals. On December 3rd, 2024, something happened that JP Morgan Chase has spent 15 years trying to avoid. They received delivery notices for 5.2 million ounces of physical silver contracts that couldn't be rolled, couldn't be cash settled, and couldn't be ignored. This wasn't supposed to happen. The entire comex silver market is built on one fundamental assumption that ULL take the cash instead of the metal. But at $59 per ounce, that assumption just died. And JP Morgan is now facing a trap they engineered themselves. Think about how futures contracts normally work in our financial system. You and I, we see these markets as places where real commodities get bought and sold, right? But here's what should grab your attention. According to comex data, 95% of all silver futures contracts historically settle in cash, not metal cash. That means for every 100 paper contracts promising silver delivery, only 5 people actually demand the physical bars. The other 95 just take their profit or loss in dollars and walk away. This creates an incredibly convenient situation for the banks running these exchanges. If only 5 out of every 100 contracts need real metal, then theoretically you could sell a 100 paper claims backed by just 5 ounces of actual silver sitting in a vault somewhere. It's fractional reserve banking applied to precious metals. You promise delivery to everyone knowing statistically that almost nobody will actually show up to collect. And for decades, this system worked perfectly because the assumption held true. But JP Morgan didn't just participate in this system. They dominated it. Between 2010 and 2020, they positioned themselves as the single largest vault operator on the COMEX exchange. Why would the biggest bank in America want to run warehouses full of silver bars? Because controlling the vaults meant controlling the delivery process itself. When those rare moments came where someone actually demanded physical metal, JP Morgan could simply shuffle inventory between their own eligible and registered vault categories, creating the appearance of abundant supply without actually sourcing new metal from the market. Here's where the story gets interesting, though. In June 2021, something changed in the global banking system that most people never heard about. The Basel III international banking regulations went into effect across Europe, with phased implementation reaching our markets over the following years. Buried in those regulatory updates was a technical classification change that seems boring until you understand what it actually does. Unallocated precious metals. That's the fancy term for paper claims on metal that isn't specifically earmarked for you. Got reclassified from Tier 1 assets to Tier 3 assets. What does it mean in plain English? Banks can no longer count paper metal promises as high-quality assets on their balance sheets. If you're holding a derivative position that promises silver delivery, you now need to back it with actual physical metal, not just another paper contract. The fractional reserve game just got shut down by international banking law. No press releases, no dramatic announcements, just a regulatory footnote that made the old manipulation strategy mathematically impossible to continue.
Now, you might be wondering why this matters right now, specifically at $59 per ounce. Pop quiz. What happens when silver prices cross certain threshold levels that change the fundamental economics of who is buying and who is selling? At $58.50, according to mining industry data, silver production becomes profitable enough that major producers like First Majestic Silver and Pan American Silver started making a calculated decision. Instead of delivering their newly mined silver into comex warehouses at exchange prices, they began selling directly to industrial buyers at premium prices. Why feed the exchange that's been suppressing your product's value for years when manufacturers are willing to pay more for guaranteed supply? Then there's the China factor that most American investors don't fully appreciate. The Shanghai Gold Exchange, which is where physical metal actually trades in Asia, saw silver prices hit the equivalent of $62 in yuan terms during November. Buy silver from comex warehouses at $59. Ship it to Shanghai. Sell it for $62. Simple geography and mathematics. But here's the consequence. Comex inventory dropped by 4.1 million ounces in November alone, according to exchange data, as metal flowed east to capture that spread. But the real pressure at $59 comes from an entirely different category of buyer, industrial users. We're talking about solar panel manufacturers, electronics companies, and electric vehicle producers who need silver for actual production, not speculation. These companies have supply chain managers whose job is to secure materials for 2025 manufacturing contracts. When silver crosses $59, it triggers something close to panic in procurement departments because this price level signals potential shortage conditions ahead. Think about what that means from their perspective. You'll be responsible for sourcing 10 million ounces of silver for your company solar panel production line next year. Your entire manufacturing schedule depends on that material arriving on time. At $58, you might wait and hope for a price pullback. At $59, you stop hoping and start panic buying because the cost of missing production targets far exceeds the cost of paying a premium for guaranteed metal. These industrial buyers, the ones who actually need physical delivery, just remove themselves from being the exit liquidity that paper traders normally rely on. So here's the trap that JP Morgan built for themselves, and it's pure mathematics with no escape routes. They accumulated 947 million ounces of paper short positions between 2008 and 2020, according to CFTC Commitment of Traders data. That's nearly 1 billion ounces of promises to deliver silver. The strategy was brilliant in its simplicity. Take the short side of futures contracts, collect premiums, and almost never actually deliver metal because 95% settle in cash. Control the vaults, control the game, repeat for 15 years. But Basel III changed the equation by requiring physical backing for those paper positions. Their vault inventory, which peaked at 47 million ounces in early 2023, has collapsed to just 8.9 million ounces today. That's an 81% depletion rate in less than 2 years. And at $59 per ounce, delivery demands are accelerating because all three pressure points, mining supply withholding, Asian arbitrage, and industrial panic buying, are hitting simultaneously.
They don't believe how toxic this is. If you're still using a plastic or wooden cutting board, you need to hear that.
Asian arbitrage and industrial panic buying are hitting simultaneously. Every ounce that JP Morgan delivers to satisfy one contract depletes the physical inventory backing their remaining paper positions. Every ounce they refuse to deliver proves the market is fraudulent and triggers more delivery demands from contract holders who realize the emperor has no clothes. They can't win. They can't escape. And the clock is ticking because registered inventory across all COMEX vaults just hit 28 million ounces. Enough to cover just 8.4 days of current delivery demand rates.
It's only 1,000
Let
tons.
me put this in perspective for you. Imagine you wrote 100 checks promising to pay someone $1,000 each. You only keep $5,000 in your bank account because historically only 5 people ever cash their checks. Everyone else just trades the checks back and forth as if they're money themselves. But then the rules change. The bank tells you that you need to have actual money backing every check you wrote. And suddenly people start showing up to cash those checks because they realize you might not be good for it. How long before your account is empty and you're facing bounce check fees? That's JP Morgan's situation right now. Except we're talking about billions of dollars and a commodity that the entire modern economy depends on. This is not a conspiracy theory. This is not speculation. This is mathematics playing out in vault inventory reports, delivery notices, and regulatory filings. And the math says JP Morgan is trapped in a position they can't exit without either admitting fraud or depleting their physical backing entirely. The delivery notice they received on December 3rd for 5.2 million ounces. That's not the end of the story. That's just the first domino falling in a chain reaction that could reshape the entire precious metals market. Because once the market realizes that the biggest bank in America can't deliver the silver they promised, everything changes and it's already started. Now, I know what you're thinking. This sounds like another conspiracy theory about big banks manipulating markets, right? Except this time we have the receipts. And not just any receipts. Official government data, regulatory settlement documents, and JP Morgan's own SEC filings that tell a story so clear that even the people doing the manipulation couldn't hide it. Let's start with the CFTC Commitment of Traders reports. These are public documents that the Commodity Futures Trading Commission releases every week showing who holds what positions in every major commodity market. Think of it as a scoreboard that tells you which teams are betting up and which teams are betting down. For over a decade, these reports showed something that should have triggered alarm bells at every regulatory agency in our country. JP Morgan Chase held a concentrated short position, averaging 32% of the entire COMEX silver market between 2010 and 2024. Let me repeat that for emphasis. One single bank controlled nearly 1/3 of all short positions in the American silver market. In March 2020, their position peaked at 40,550 contracts, which represents 202 million ounces of silver they had promised to deliver if called upon. To put that in perspective, that's more silver than most mining companies produce in 5 years. Here's where it gets really interesting, though. The CFTC has position limit rules specifically designed to prevent this exact scenario. These rules cap how large any single entity's position can be in a commodity market. The limit for silver is 9,000 contracts. So how did JP Morgan hold 40,550 contracts,
crooks.
which is 4.5 times the legal limit? They claimed an exemption. According to their filings, all those short positions were classified as hedging activity for their vault operations and banking services. Think about what that means. You're allowed to break the position limits if you claim you're hedging legitimate business risk. But if you're rerunning vaults specifically to facilitate the manipulation and then using those vault operations as justification for unlimited position sizing, you've created a perfectly circular scheme. It's like owning a casino, loading the dice, and then claiming your gambling is just hedging your casino business risk. The regulators bought this excuse for 14 years. But the evidence didn't stay hidden forever. In September 2020, JP Morgan agreed to pay $920 million to settle charges with the Department of Justice and the CFTC. The charge, spoofing. That's the practice of placing large fake orders on the exchange to manipulate prices, then canceling those orders before execution. According to the DOJ investigation, JP Morgan traders placed thousands of spoofing orders in precious metals markets between 2008 and 2016, creating false impressions of supply and demand to move prices in their favor. $920 million. That's the largest precious metals manipulation fine in American history. And here's the part that should make your blood boil. JP Morgan didn't have to admit wrongdoing. They paid the fine, released a statement about improving their controls, and kept their massive short position completely intact. The underlying manipulation, the concentrated position that gave them market control, was never addressed. They paid what amounts to a cost of doing business and continued the same strategy for another 4 years. The CFTC data from November 2024 tells you exactly why this matters. Now, though, for the first time since 2008, JP Morgan's silver short position dropped below 15,000 contracts. That's not because they decided to voluntarily exit their winning strategy. That's because they're being forced to deliver physical metal to satisfy contracts. And each delivery is a forced closure they can't paper over anymore. The scheme worked for 14 years because the paper game never had to become a physical game. But at $59 per ounce with Basel III enforcement, the physical game is the only game left. Now, if you want to understand where this is heading, you need to know the story of what happened the last time someone tried to corner the physical silver market.
Kraken is the easiest way to start exploring crypto. Sign up in minutes with no complicated steps and zero stress.
Tried to corner the physical silver market. March 1980, the Hunt brothers. Bunker Hunt and his brother Herbert accumulated 59 million ounces of physical silver between 1973 and 1980, driving the price from $6 per ounce all the way to $4,945. Adjusted for inflation, that's equivalent to $187 in today's money. The Hunt brothers' strategy was simple and devastating. buy futures contracts, demand physical delivery, and squeeze the shorts who thought they could sell paper indefinitely. By early 1980, they had accumulated so much metal that COMEX faced a crisis. The exchange simply didn't have enough physical inventory to satisfy delivery demands if the Hunt brothers kept rolling their contracts forward and taking possession. The entire market structure was on the verge of collapse. So COMEX did what regulators always do when the powerful are about to lose. They changed the rules mid-game. On January 21st, 1980, the exchange implemented what became known as Silver Rule 7. This emergency measure banned new long-only positions in silver futures. You could only enter the market if you were closing out an existing position or hedging. The purpose was explicit. Stop the Hunt brothers from accumulating more and force them to liquidate. The effect was immediate. Silver crashed from $49 to below $11 in just 4 months. The Hunt brothers were bankrupted. The short sellers were saved, and the lesson was clear. You can't beat the exchange because the exchange will change the rules to protect itself. Fast forward to today, and the situation has one critical difference that makes all the historical parallels both terrifying and exciting. The current delivery pressure involves 862 million ounces of open interest across all COMEX silver contracts. That's 14 times larger than what Hunt brothers accumulated. But here's the trap for the regulators. They can't just implement Silver Rule 7 version 2.0 because Basel III international banking regulations now supersede COMEX bylaws. Let me explain why this matters so much. Basel III is international banking law implemented across the United States, Europe, and major financial centers worldwide. It's not a COMEX rule that some exchange committee can vote to suspend during market stress. The requirement that banks hold physical backing for unallocated metals derivatives isn't something JP Morgan can lobby away or that regulators can waive during a crisis. Violating Basel III means violating international banking compliance standards, which triggers consequences far beyond just getting fined by the CFTC. So you have a situation where the precedent says change the rules and protect the shorts. But the regulatory structure says you can't change these particular rules without triggering a global banking compliance crisis. The Hunt brothers were one family that could be bankrupted by rule changes. Today's delivery pressure comes from industrial users who need the metal for production, sovereign wealth funds protecting currency reserves, and thousands of retail investors who learned the lesson of 1980 and know the paper game is rigged. You can bankrupt one billionaire. You can't bankrupt the entire industrial supply chain without collapsing the economy. But here's the smoking gun evidence that tells you JP Morgan knows exactly how trapped they are. Their own CSK filings. Every quarter, publicly traded banks have to file 10Q reports detailing their financial positions, including derivatives exposure. In Q3 2024, JP Morgan's precious metals derivatives book decreased by $14.7 billion. At the same time, their physical metal holdings increased by 2,100 tons, according to vault inventory disclosures. Think about what those numbers mean. The bank that has held the largest short position in COMEX silver for 14 years is simultaneously closing out derivatives positions and accumulating physical metal. This is not normal portfolio rebalancing. This is institutional panic. They're not making this move because they suddenly believe in silver as an investment. They're remaking this move because they know the paper market is going to fail and they need physical metal to survive what's coming. And if you think I'm reading too much into their position changes, go read the risk management section of their most recent 10Q filing. There's a line buried in the legal disclaimers that says, and I'm paraphrasing here, physical delivery demands may exceed available inventory during periods of market stress. That's corporate lawyer language for we might not be able to deliver what we sold. They retelling you the trap exists right there in regulatory filings, that they are legal.
The 10Q, not the 10Q. So basically, it's everybody asking for delivery because our good friend, this is worthless. So everybody's dumping the dollars for that. That's why everybody's asking for physical because, like us, I don't want a contract of gold. I want gold. And so if I want that, then I'm going to ask for delivery. Well, that's what I'm doing when I go to the coin store. I go, I want physical. And now everybody who has with the JP Morgan was Fancy Dancy and Basel III, which is actually a city in Basel, Switzerland. They're saying, no, you can't carry that and fuck the risk and all that. And so they have to cover. So when you hear people say, well, the U.S. is get all this gold and silver. It's to pay these off. It's because they've been shorting everything and it's bullshit. And now everybody's calling them on it. And they don't have the physical to handle the short. So now we understand what happened today. They changed the regulations of 50% more for the calls. What do you call it? The margin calls just got a lot more expensive, and they're going to lose. So all these margin calls happened at 10 o'clock here. They happened in Europe, but nothing happened. But in the U.S., they happened at 10 o'clock, and that's why you're seeing this craziness going on here. Let's see. All right, we're back to 61.89. So this was down over $3. It's 235, and this is now we're getting back to 4,300. So again, it's this 10 o'clock bullshit reset to get everything. These margin calls and stuff, but it happens. Everything happens at 10 o'clock. That's why it always drops. But as you can see, everybody's buying cheap now. Silver now 61.90. So if you knew this was happening, you don't buy silver at 64. Oh, it's dropping to 61. And at 61, you knew that's as far as it was going. Everybody's buying, and now we're back to 62, and we'll be back to 64. But they've already done this. They can't redo it now. So now, Katie bar the door. Here we go. All right. So that's JP Morgan. They were with Madoff. They are Ponzi schemers. They're schemers, and look what happened to them. Quoting the Joker. Now, this guy's an idiot. He's saying how the $38 trillion, how the U.S. is quietly erasing it with crypto and gold. You ain't doing it with crypto. Crypto's worthless. Nobody will take it. Crypto only works if there's somebody that will accept it. I won't take, you can't pay for football with crypto. With me, you can play gold and silver. I'll take that, but I'm not taking crypto. I don't believe it's real, and I don't have an account to accept it. Excuse me. So they're saying they're going to push the crypto price up and the gold price is bullshit. This is terrible. Silver inventory apocalypse. So you're seeing a lot of these videos. The physical squeeze that could, whatever. JP Morgan hoarding silver. Well, no, because they got to pay. People are now asking for delivery, as we just heard. So we don't need to keep replaying the same thing 15 times, but they need to get silver to pay off the deliveries. Let's see. The war is over in Russia, kind of. And we got all these problems in the UK. Protests, Steel City erupts. So the UK is in big trouble. We showed you that France is in big trouble. China's silver exports shakes the markets. Let's watch that one. It looks like fun.
You're using cinnamon wrong, and your blood sugar is paying the price. Let me explain. This isn't your typical.
How could
Right
you
now,
use
as you watch
cinnamon?
this, something unprecedented is unfolding in global
Oh,
markets.
here's this idiot
December
again
11th,
on a different channel.
silver prices have reportedly surged to around $63 per ounce, levels we haven't seen in modern trading history. We're talking about what analysts describe as roughly a 113% climb in just 12 months. But here's my analysis of why this spike is fundamentally
And who are
different
you?
from typical commodity rallies.
See, we
This
don't
appears to be strategic position.
know if we should listen to this guy or not. We don't know who he is and what his standpoint. we listen, but we can't even count on this guy being real because I don't know who's talking. Is this guy talking English or is he talking Chinese? And it's being translated by AI, and they keep missing the words.
Not just market forces. And when I studied historical patterns, I found three eerily similar situations. In each case, the dominant economic power faced serious decline every single time. Let me walk you through what I believe China did on October 30th, why I think this matters to your daily life, and three critical developments you should understand before January 1st. That's just 3 weeks away. I'm not a financial advisor. This isn't financial advice. And I'm not affiliated with anyone mentioned in this video. This is purely educational analysis based on publicly available information. So here's what reportedly went down late October 2025. According to multiple trade reports, China's Ministry of Commerce announced new export control measures on silver. Starting January 1st, sources indicate that silver exports will require government approval. We're talking about export quotas, licensing requirements, and what they're calling national security reviews. My interpretation: China now holds significant leverage over global silver distribution. Market response was immediate and dramatic. Reports suggest Shanghai silver inventories dropped approximately 40% within 3 weeks. Physical silver premiums in mainland China have reportedly skyrocketed. Some sources indicate Chinese buyers are paying anywhere from $108 to $128 per ounce for actual physical metal. That's roughly double the global spot price. In my view, this signals they're anticipating major supply constraints. Meanwhile, Western mints are reporting sellouts. London Metal Exchange inventories have reportedly hit multi-year lows. Major institutional players are demanding physical delivery instead of paper contracts. We're talking about orders worth approximately 350 million ounces. That's more than what many analysts estimate as the entire annual global surplus. Now here's why this matters to you personally, even if you've never invested in precious metals. Your smartphone contains roughly 0.5 grams of silver. Electric vehicles? Industry estimates suggest between 25 and 50 grams per vehicle. Solar panels use approximately 20 grams each. And here's the kicker. AI data centers powering tools like ChatGPT are among the biggest silver consumers in tech history. Each server reportedly uses specialized silver-coated components for heat management and high-speed connectivity. Some industry forecasts suggest the AI boom alone could consume around 200 million ounces of silver by 2030. Defense applications are equally critical. Missiles, radar systems, guidance computers. Reports indicate that U.S. military consumed approximately 15 million ounces in 2024. Here's the concerning part. The United States apparently produces only about 14% of its domestic silver supply. Just 14%. The rest, imported. And here's what many people don't realize. China doesn't mine the most silver. They produce roughly 6% of global mine output according to available data. But China dominates the refining process. They process raw silver from other countries, convert it into high purity industrial grade material, then distribute it globally. Or at least they did, until 3 weeks ago. Now, I know what you're thinking. China wouldn't actually restrict silver exports. That would hurt their own economy. This is just negotiation tactics. Let me share why I believe that's a miscalculation. Because when I researched this, I found this exact pattern has played out 3 times throughout history. Similar structure, similar progression, similar outcomes. Based on my analysis, we just entered stage 3. Here's the pattern I identified. 4 stages, consistently. Stage 1 is dependency. A dominant nation builds critical infrastructure around a single commodity. Their factories depend on it. Their military requires it. They assume unlimited access. Stage 2 is weaponization. The supplier realizes they're holding strategic leverage. They begin restricting exports gradually, testing responses, creating scarcity while citing administrative delays. Stage 3 is crisis. Prices surge. Industries slow production. The dependent nation scrambles for alternatives, but the timeline is too compressed. Supply chains are already disrupted. Stage 4 is realignment. Industrial dominance erodes. Currency weakens. Military advantages diminish. A new global order emerges. Let me give you one historical example that mirrors what I see happening now. Around 1870, Britain controlled an estimated 60% of global manufacturing. The Royal Navy dominated maritime trade. But they were heavily dependent on German steel imports. For decades, the system worked smoothly. Germany supplied raw materials. Britain manufactured the machines, ships, and weapons. Then, around 1890, Germany reportedly started creating delays in shipments. Not officially, that would have been an act of war, just bureaucratic complications, extended quality inspections. British factories experienced slowdowns. Shipyards missed delivery deadlines. Steel prices reportedly tripled by 1900. Britain attempted to develop domestic steel capacity, but they were already behind schedule. The infrastructure development took years. The costs were enormous. 1914, World War I began. Germany's steel advantage translated into military capability. They reportedly outproduced Britain in artillery, machine guns, and submarines. Britain survived, but they never fully recovered their industrial dominance. By 1945, the United States had emerged as the new global superpower. Same pattern, different resource. And the entire transition took less than 50 years. Here's what fascinates me. China learned this lesson through direct experience. Around 1800, China was the world's largest economy. They produced everything Europe desired: silk, porcelain, tea. But China demanded payment exclusively in silver. By approximately 1830, China had reportedly absorbed roughly 50% of global silver production. This created a severe problem for Britain. Their silver reserves were depleting. Their economy was hemorrhaging wealth eastward. So Britain found an alternative solution: opium. They flooded China with opium from India, reversed the silver flow, turned China's surplus into deficit. When China attempted to stop it, Britain invaded. The Opium Wars. China lost. They were forced to open ports, cede Hong Kong, and accept European dominance for over a century. But here's my key observation. China never forgot that historical lesson. They're not repeating the same mistakes. 185 years later, they've positioned themselves on the opposite side of the equation. So where do I believe we are right now?
On Christmas morning, if your kid wakes up to this game stick, it's gonna be their favorite present. Let me show you what this thing can.
Where do I believe we are right now? Stage 3, the crisis stage. And here's my supporting evidence. The United States government reportedly designated silver as a critical mineral in 2025. They recognize the strategic threat. Cumulative global silver deficits are estimated at around 800 million ounces. 5 consecutive years of shortages, according to industry analysts. Production reportedly can't keep pace with demand. Here's the structure.
800 million ounces is 25,000 tons. I did the math.
Issue. Approximately 70% of silver comes as a byproduct of other metal mining operations. You don't simply open a dedicated silver mine. You mine copper, lead, zinc, and silver.
Lead
comes
or
as a
lead?
secondary output, which means rapid production increases are structurally difficult. If copper demand drops, silver supply drops, regardless of silver prices. The system has fundamental constraints. Reports indicate solar panel manufacturers are experiencing delays. Electric vehicle production is reportedly slowing. AI chip makers are searching for alternatives. But here's the technical reality. Silver's electrical conductivity is the highest of any element. Its thermal conductivity is unmatched. You cannot effectively substitute it in high-performance applications. Not for military systems, not for AI infrastructure. The Pentagon understands this. Defense contractors understand this. Silicon Valley understands this. And I believe China understands that they understand. Industry analysts are forecasting potential shortfalls exceeding 200 million ounces in 2025. That's approximately 15% of annual demand.
That's about 5 tons.
Current price
5,000
is around
tons.
$62 per ounce. Deutsche Bank's public forecast suggests approximately $65 by end of 2026. Bank of America's analysts have similar projections. But here's what I'm hearing isn't being said publicly. If China maintains these restrictions, if deficits compound, some analysts are privately discussing $75 to $100 per ounce. Not in 10 years, within 18 months. So what happens next? In my analysis, there are only 3 realistic options. Option 1, the US pays whatever China demands. Prices surge. Industries pass costs to consumers. Your smartphone becomes more expensive. Your electric vehicle costs more. Your electricity bill increases because silver is embedded in modern infrastructure. Option 2, the US sources silver elsewhere. They pressure Mexico, Peru, Canada, Australia. But these countries are reportedly already at maximum production capacity, and China can outbid them with an estimated $3 trillion in foreign reserves. Plus, China controls the refining infrastructure. Raw silver ore requires processing. Option 3, the US builds domestic refining capacity. This is the only sustainable solution in my view, but it takes years, perhaps a decade. Permits, environmental reviews, construction, testing. By then, China has potentially locked in industrial advantages. Their AI infrastructure could be superior, their green energy grid more advanced.
Sorry.
Their AI infrastructure could be superior, their green energy grid more advanced, their electric vehicle fleet larger, and the United States is playing catch-up with higher input costs. Remember the historical pattern? Britain attempted to build steel capacity after depending on Germany. Too late. The US is attempting to secure silver after depending on China's refining network. History suggests the timeline is compressed. So what should you do with this analysis? 3 specific recommendations. First, understand the timeline. China's export controls reportedly take full effect January 1st, 3 weeks from now. I expect prices could potentially hit $70 per ounce by March, possibly higher. If you're in industries dependent on silver, electronics, solar, automotive, consider factoring this into planning now, not later. Second, recognize the divergence happening. Physical silver and paper silver are sitting. Chinese buyers are reportedly already paying roughly double the paper price for actual metal. That gap represents a fundamental disconnect between futures contracts and physical reality. When that gap potentially closes in Western markets, and I believe it will, the price adjustment could be severe and sudden. Third, watch developments in the next 90 days. If China follows through with strict enforcement in January, if inventories continue declining, if more countries begin hoarding strategic reserves, that would confirm we're locked into stage 3. At that point,
Whatever. We're already there. I don't know what he's talking. I hate these little $75. These banks. What do the banks know? They don't know how to forecast. You're looking at the bottom line is you're looking at $700 to $1,000 an ounce silver. When it happens, soon. I don't give dates, but you have very limited supply and you have huge demand, and demand's not going away. And he's not even calculating in the demand as silver is money, right? Silver is money, like gold is. We got to get out of the dollar. Everybody seems to miss this little factor. If you don't get out of the dollar, you're dead. It's worthless. I told that to the girl at the bank. She didn't understand. But so I don't really care there's no stages, there's no phases. People need the dollar. The dollar's inflated to zero. People need money. You go into gold and silver. As gold gets very expensive, silver, you start buying silver, it's cheaper until that gets so expensive. And then you're either priced out or you just sell things to get silver and gold. But I don't buy this. By the end of the year, silver should probably be, we're already at 63, 64. We'll be 75 by the end of the year. And then you can't use a chart. Only idiots use charts because the variables change too much. Gold's near 4,300. Gold, I thought would be at 5,000 by the end of the year, but it looks like maybe 4,500 by the end of the year. And then we'll see what happens in January with all these restrictions by China and all that stuff. So we'll get a better view of it. But anyway, there's a mess. Let's check what's going on in Russia. The war is over. Let's see if it really is.
I worked in the adult industry for years, and today I'm revealing how actors over 40 stayed hard as steel, take after take. It's not.
Operations forces roam freely during the night around Odessa and in Kiev.
Oh, we seem to be reaching now the end game in Ukraine, and the big question is, will it be finished by diplomacy or will it be finished off on the battlefield? And in terms of diplomacy, it doesn't look as if things are going very well. We have Merz, Starmer, and Macron, who reportedly advised Zelensky to reject Trump's peace agreement, and which will have consequences, I guess, both for Ukraine as well as the Europeans. So we now see that Zelensky still wants NATO, he wants the security guarantees, and he will not cede any territory. So what will happen now?
Well, I think a lot of things are ending besides the war in Ukraine. I think NATO is reaching its sell point, sell due date, whatever you want to call it. I think the European Union is crumbling. I think the governments in Berlin, Paris, and London are extremely fragile. Their approval ratings are down in, some people say, the high teens. Others say, around 30% or less. And as far as the battlefield is concerned, at least the reports that I'm being exposed to say that you have large numbers of Ukrainian soldiers now who are people that have been at most a week in uniform. They've had virtually no training and have been sent forward ostensibly to be killed. Then others are now disguising themselves as women in order to find their way through the lines. The Russians are treating them as humanely as possible because they're simply shaking their heads in disbelief that this sort of nonsense is continuing. I think the Russians are also moving some forces over the river that are now in and around Odessa. I was told yesterday that Russian special operations forces roam freely during the night around Odessa and in Kiev, because you have these long periods where you have no illumination, no lighting, no energy for it. And so they can put on their night vision devices and wander around without interference. I think this whole thing is coming to a very tragic but predictable end. And I think the Russians are concerned now with what happens as this thing crumbles. Now, they can't force the Europeans to do much, but I think the Europeans are foolish to believe that there's anything they can do to influence the outcome other than be willing to sit down and talk to the Russians. The most interesting aspect of this whole thing is now this new national security document that's come out, which has no strategy per se. It's simply a set of assertions. And the assertion that is most troubling to the Europeans is the recognition that we're not going to stay in Europe in perpetuity. We're not going to maintain our forces there in perpetuity. We're going to leave. And the question is, how do you do it? How fast does this happen? And naturally, what the Europeans don't realize is that while inevitably there is a critical need to reduce the American defense spending habit, the Congress on the Hill wants to add more money to defense because they line their pockets as a result. Their donors profit. Some of their constituents retain jobs. So it's a strange set of circumstances. And I don't see any real direction other than we're going to pull in our forces from Europe initially. And then eventually I think we'll see the same thing happen in Korea and Japan. We can't afford anything. We're financially ruined. We're broke. Nothing is improving. I was shown a statistic yesterday that said that in the last 22 months, 30% of all the dollars that have ever existed were printed. Stop and consider that. That is an enormous sum of money. I don't know how many trillions it amounts to.
150.
But to stop and think that 22 months, that short period, we printed 30% of all the dollars that have ever existed, tells you we're in a lot of trouble. Now, we haven't had the complete collapse here yet, but I think it's coming.
If you live in a Michigan zip code and have 0 DUIs
Make
in the
commercials.
last 5 years,
Collapse here yet, but I think it's coming.
Well, I'm glad you mentioned this new national security strategy, because it's very hard to sometimes predict what Trump's going to do. He tends to go a lot of back and forth in terms of how he wants to end the Ukraine war as well. But with this new security strategy, it seems like we have something concrete on paper. So in terms of how Trump wants to approach this. But what does this new security strategy tell you about how the U.S. will deal likely with the Ukraine war? I mean, it does deal with it directly, but I guess the wider ideas put forth in this document.
I don't think there's a great deal that President Trump can do. I don't think there ever was. This was one of the criticisms I had with the dithering over the last 12 months. In fact, before he was elected, I was suggesting strongly that once he was elected to the presidency and was inaugurated, that he should begin the process of disengaging. There's not much that can be done at this point. The opportunity for Washington leading NATO in a different direction was lost back in 2022 when the first opportunity came in the form of an agreement reached in Turkey, in Istanbul. That was rejected out of hand. Subsequent discussions were all meaningless because everyone was convinced that Russia, given enough time, would fall apart, that Russia was weak, the government would not stand, that Putin was the evil dictator, that under these circumstances would we willingly removed by his population. Well, it's all nonsense. But we stuck with this mantra, and even after Trump began to sober up in the run-up to his election, once he was in office, he began repeating all the lies that had become standard in NATO and across the West. that were prevalent in the media. The outrageous claims of heavy Russian casualties. Well, the Russians were taking casualties, but they weren't the heavy ones. The heavy casualties were being taken by the Ukrainians. I mean, you just had a debate and touched on some of these subjects with this British, I guess he was an admiral. I don't remember. Was he an admiral or a general? People are still living in fantasy world here in the United States and in Western Europe. The average American knows that things aren't going well economically, but a sledgehammer is coming at you, but until it finally hits you over the head, you don't really understand what it means. I think that's kind of where we are with everything right now in the West. We're in a funk, as they say, a twilight zone between reality and fantasy. Reality is coming. You can see it. It's like looking at a train that's coming down the tracks, a locomotive. It's headed for you. But until it arrives at the station, you're suspicious. You're skeptical. No, it's not really coming, but it is. So I don't think this is a strategy document. There is no strategy. Strategy means that there's a coherent framework. There are guideposts. Sometimes you can call them guide rails. In other words, these are the areas where we're going to focus. This is what's strategically vital and important to the United States. This is where we're going to remain committed, engaged, and so forth. What we have is this vague notion. Well, we're going to focus on the Western Hemisphere, where we want to be dominant. Okay, well, we're already dominant in the Western Hemisphere, but apparently somebody's decided we need to invade Venezuela to demonstrate just how dominant we are, which I think is a very dumb idea, but that's prevalent in Washington. We have to signal to everyone that this is our hemisphere, we're in charge. And then you say to them, well, have you talked to Moscow and Beijing? Well, what do you mean? I said, well, they seem to think they're dominant in Asia and dominant in Eurasia and Europe. Have you talked to them about their interests? No. Where everything is done in isolation here in Washington from what happens anywhere else. We're not really taking those things into consideration. The only good part of this is Trump's personal input. Now, what is Donald Trump's personal input? First of all, it's we're not paying for NATO anymore. He's been against that for years. So NATO is going to be on its own. That's fine. Thank you. Now, how are we going to do that? That's absent. There's no discussion of how you move through some sort of process to Europeanize NATO. Well, it's probably irrelevant because I don't think Europe is going to retain NATO. There was a point in time in the 90s when you could have had a Europeanization. But now Europe is fiercely divided. It was always difficult to move as one. Moving Europeans collectively in a direction, sort of like herding cats, it's not going to happen. So you're going to end up with new security arrangements across the continent. Russia is going to play a role in that, whether we like it or not. So what's the long-term strategic focus and forecast other than we want to be dominant in the Western Hemisphere? We're no longer apparently preparing for war against China, at least not based upon what I read.
If you live in a Michigan zip code and have 0 DUIs in the last 5...
All right. Well, we don't have to hear the whole thing. He's getting into Venezuela. We were looking at Ukraine. The Ukraine war and Russia. Zelensky doesn't want to end it because he'll lose power and he'll go to jail for stealing. He stole $1 billion of the aid that we gave to the Ukraine. Zelensky just stole it, and his generals, and he's got bank accounts in the U.S. and other countries and houses in Miami and Greece or something like that. So this war that should never have been started is the most pointless war ever is still going on. The defense contractors want to sell weapons. That's why the war is going on in the first place. It's a nightmare. And talking to Jenna in the Ukraine and Odessa, they don't have lights and they don't have water half the night. And that's going on until April. And meanwhile, it's cold there. So she comes home from work. There's no electricity. There's no water. Oh, like really good to come home to. And it's cold, and she's eating by candlelight, whatever she can afford. I guess their grocery stores and banks and hotels are kind of open partially, but who's really going to vacation there? And it's a shame. Russia just keeps pounding, and they got a bunch of gold, so they're not running out of money. They got oil. They're not hurting. U.S. is hurting. We're bankrupt. We're in big trouble. We're inflating the money supply, so it's worthless. We got 38 trillion in debt. We're fucked, which is why we talk gold and silver all the time. All right, football, free pick. Take Green Bay, Denver. Take Denver at home as a home dog. I also gave you Detroit, LA, 40-32, so it should be a high-scoring game. Army plays Navy. The Navy 6.5, 39.5. Usually they're low scoring because they both run the ball, so it eats the clock, and they both know each other's offense. So it's hard to really move the ball on them. So you'll probably see the 17-10 game that we always see. Boise, Washington tomorrow. Washington's up to 9.5, 51.5. I don't know what to do with that one. So it's a weird bowl game tomorrow. Like, why are you starting this tomorrow? Unless it was just a regular game, but I think the Big Ten's over. And again, we went through who's in the teaser. We went through who needs the game. Again, $100 buys you all the bowls and the college playoffs for the rest of the year. $100, $200 buys you everything, all the college and on the pro. And I will show you how to buy it on Teaserking. Let's see. Gold $42.94, silver $61.50. They keep trying to push it down. So here's Teaserking. Go to purchase picks, right? So if you go, there's 4 columns. So if you go, there's 4 columns. So if you go to the third one here, which is college, and the second one, college picks, all bowl games includes college locks and playoffs, $100. Or if you go to the last column, so the fourth column, which is pro and college together, which is the last column to the right, you can get both college and pro picks, includes pro and college locks. Or no, sorry. Go down to the third one. So there's the top one, the second, the third one. And it says both pro and college picks includes pro and college locks, playoffs, and bowl games for $200. That takes you to the Super Bowl. You get all the locks and you get all the bowl games and the pro, the last 4 weeks and the playoffs. So for only $200, that would be your best one to buy. That'll give you everything. That includes this week 15, 16, 17, 18, 4 weeks of playoffs and a Super Bowl and the college bowls and the college playoffs. So you get all that for only $200. I'm $100 a week for pro and college. And you're going to have 3 weeks of or 4 weeks of college bowls and then playoffs, and then 4 or 5 or 6, about 6 weeks, 15, 16, 17, 18, and 4 weeks of play. So that's about 8 weeks, which would be $800 for $200. So Merry Christmas. Anyway, so that's where you go. You go to purchase picks. Here, so here's Teaserking. Home, what's a teaser? Boom, boom, history, purchase picks. And then you get the password. So when you so if you bought it, I had a guy buy the other day. He bought the 200. He gets a password. You use the same password. So you go into here, you go into this week's picks, and it's looking for a password. And you just use the same password, right? You use the same password each week because it's good for the end. So this will say picks for week ending December 15th, then it'll go December 22nd, then it'll go December 29th, then January, blah, 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 blah. You keep using the same password, you keep submitting it, and you'll get that week's picks. So that's all you need to do. and I got 3 locks going in the pros already this week. And then I have other plays. I have played the Army Navy game. We've looked at the weather. So I've gone totals on some, and then you have certain games where there's no weather issue, mostly on the West Coast. So I played those games. And that's it. So we'll leave you with gold 42.92, silver 61.44. So silver will be back to 64 Monday or Tuesday. See, the Chinese are gone, and it closes at 5 o'clock today. So the Chinese and the Europeans won't get back in. They're the ones buying the silver. So once in a while, the U.S. buys it. They bought it like on Tuesday. It went way up. Yesterday, it went way up. Now it's down. But it's bullshit. It's because of this, the commission you got to hold for the margin call, and then just people needing to get out are basically forced to sell. So that's what's going on today. The buyers will come in because the demand is to get out of the dollar, to get into gold and silver, and the other uses of silver. You have high demand and you have very low supply, which makes the price go up. So the people keep buying it because they need the silver, and people will buy gold because they need gold, because you need to get out of the dollar. So with the BRICS demand, which is huge, you know that the demand will be there. So you don't worry about the price going down a little in COMEX based on a margin call bullshit. And that's all that was. So we'll be fine. To quote Screen Rant, no problem at all, barely an inconvenience. So it's just, that's where we're at, but we know we're fine. We're in the right spot. We don't worry about it. We just wait for it to go up. And, you know, it was 46, 47 a week or two ago. And we're going, and I said, don't worry, it'll be back to 50, and then flies through. Now we're in the 60s. We're at 61 and we're bitching. Oh, it was 63. Don't worry, it'll be back there. But anybody that predicts it, this Michael Oliver or any of these idiots that predict the prices by November 1st, or, you know, by February 1st, it'll be this. These people are idiots, and don't listen to them. We know it's going to 1,000. We can't tell you the date because that would be idiotic. But we know that's where it's going based on the strong demand and the weak supply. And people need it, and they're going to keep buying it at whatever price. The big thing with gold and silver, the real price is up here and COMEX is down here. We don't know what this price is, but we know the price is there. We know it's there based on demand. So we know it'll keep climbing until we get to this price. So we know there's this price. Once you understand that, then the rest is a piece of cake. You just wait and watch it go up and up and up. All right, anything else? Football, free pick, take Denver plus the 9 against Green Bay. Houston, 13-0 in a teaser. And Denver, 13-0 in a teaser this year. So if you bet a teaser on Denver and Houston every week, you won every week. Happy times. Watch your gold and silver go. And then I went through, just watch earlier, who needs the wins. You know, like Houston must win. Philly on a 3-game losing streak. I expect them. It's the perfect storm. They get Oakland. Here we go. Here's the chump, and then they should beat it. Tampa, beware. They, watch the defense. Tampa with the 31 defense. Forget about it. So be very careful. Don't bet on teams that have 30 defenses. You bet against them or you bet over. Like Cincinnati, it's tough. 33 defense. It's tough to bet Cincy. You bet the game over, although you might bet it because it's cold. That kind of neutralizes things. So there'll be a lot of Derrick Henry and Lamar throwing interceptions. And the Bears and New England, are they any good? Well, we're finding out. This is the test. If New England beats Buffalo, then they're good. They beat them twice. Otherwise, they just had a weak schedule. And this is the problem in the NFL, the weak schedules. The weak teams play each other 8, 9, 10 games. It's way too much. and the strong teams play each other. That's Kansas City's problem. They had to play Philly and Buffalo and Baltimore and Detroit, San Diego twice, Denver twice. And, they're in the hardest division, and it's hard enough with 2 Denvers and 2 San Diegos. But then you add on it Baltimore, Buffalo, Detroit, Philadelphia, and, every week they're not getting the easy, oh, where's Tennessee? Even there, they got Jacksonville and Houston, and they lost both of those games. So just be very careful. Although I would think KC is going to win this game because of the cold weather. I think that'll be San Diego won't like it because they're not used to it. They're indoor. These indoor teams really have a problem going to, Green Bay, Minnesota, Chicago. And with that, I think that's it. I'm tired. I apologize. I'm a little tired. When I had to run to the bank and the grocery store and things like that. So anyway, have a good week. I will be on, tomorrow I'll be probably 11 to 1. I normally am on at 10 because of Big Noon and all that. And I don't know what time Army Navy's on, but it's just one game. And we've already talked about it. We will talk about the playoffs and the bullshit we got there. See, the pros are easy. You win your division, you get the best record. You're in the playoffs, right? The tiebreakers. And the only problem is the schedule, where Kansas City being probably the top 2 or 3 teams getting screwed by this terrible schedule that they have. And then teams like Carolina and New England and some of these teams that suck are getting benefit of this week's schedule, and they have a good record. But if KC played them, they'd kill them. Anyway, that's what's going on. So have a good day. Have a good weekend. Keep buying your gold and silver. It's a good day. It's down. Again, this is a margin call, increase that's knocking the price down. They have to pay up. These banks are going to be in trouble. Be careful where your money is at the bank. You might want to get it out before they won't give it to you. And that's it. So www.teaserking.com. Again, $200. I showed you where to go. You get the rest of the year. If you just want the bowl games and the college playoffs, which always include the locks, that's only $100 just for the college. I know I get people that like that, and $200 for everything else. So very good prices. And that's about it. So enjoy. Go buy your gold. Gold's really right about back to 4,300. That really didn't get that hammered too much. Silver got hammered, but it's gone up, and it's really people have to dump their positions. So there's a reason for it. It's not because people don't want it. It's not because there's no demand. Anyway, I think that's about it. So have a good day. Enjoy your weekend. www.teaserking.com. Take care, everybody.